My saving grace more than once a week. Thank you for that. I just unmuted it. Nope, Edwin D. Claire just fixed us. You guys have it now? Thank you, Claire. I owe you one. We ever bump into each other, buy you a pina colada or something. She does. Clarity. I see what you did there, Rob. All right, now that we have the little audio on YouTube, guys, a trade is nothing more than momentum, a clear path, and an entry area. Don't overthink it. Allow it to be simple. And that trade is going to happen on two charts. We're going to look at a 13-2 chart. We're going to determine the direction of the market. Green is up, red is down. Pretty simple on a 13-2. We're going to find those strong triggers. We're going to locate that clear path. And then we're going to whittle it down on the 5-1. Refine that broad stroke of a brush. And we're going to find that entry. And it's really going to become a matter of recognizing momentum, strong triggers. And it's pretty easy to locate, guys. And let's put some trigger lines up. We're looking at crude oil right now because crude oil seems to be moving. Guys, I'm going to take every indicator off of my chart with the exception of momentum indicators. And I want to go through and I want to show you exactly what strong trigger lines look like. That's hard to say. When your small trigger lines, these solid lines, break away from the large, when there's space between the two, guys, this is your best of the best look. This is a look that lets you know that the odds are favorable for the market to continue up. And you can see that sure enough it did. Go in the other direction. You're going to recognize the small breaking below and away from the large trigger lines. This acceleration lets me know that the odds are favorable for the market to continue down. And it really is that simple on your 13-2. We're going to look for opportunities every time we have that odds favorable momentum. And if we're going back and you're studying, if you're building confidence with this software, you can take a circle, and if you see one of these tails with odds favorable momentum, guys, you are already 2 out of 3 on your way to recognizing a high probability trend trade. These tails represent that potential entry area on the 5-1 chart. So I'm looking for the strong triggers. Smalls above the large are wide, they're angled in the direction of the trend. Guys, this is your best of the best look. And look, there's another one of those circles. Odds favorable momentum. This is going to be the easiest part of your study with recognition. When the trigger lines break away from the large and begin to create momentum. Give me a Y in the room if you're with me on that one, guys. Really super simple concept. I'm going to circle one more tail at the top here because I know a lot of you have already posted pictures. Many of you have already made money today in this crude oil market, giving you what you need. And then let's put some indicators back on. I'm going to put my template back on. It's going to take just a second to go through. Guys, I'm trying to change up the routine a little bit. A lot of you spend a lot of time in this classroom, and I want to make sure that it's pretty awesome for you, that we get to get a lot of information, but let's watch the live market as well, right? Crude oil just opened 7 minutes ago. They're making decisions about what direction they want to go. You can see that we've already got odds favorable momentum growing. We've got those small breaking below the large triggers. The large triggers are beginning to angle down. And guys, this is rule number 1 already coming into effect here. But rule number 2 is going to tell us, make sure that you have a clear path. What is a clear path? Well, it's pretty simple. A clear path, what we call a termination condition, means that price has reached an area, just like it's reached Fibonacci resistance here. If my trigger lines remain below that area, this area of resistance is likely to stop the market. And you can see that it absolutely did here. Resistance holds, and the market works its way down. The same is true at Fibonacci resistance, Fibonacci support, these cyan divergence lows, these magenta divergence highs, and even these 1-to-1 dots printing right up here. So price exceeds this magenta low. The trigger lines don't follow. Look at how far away these large triggers are. The small triggers never make it through on either count here. Guys, what you're looking at is that clear path going away. That clear path goes away, we call it a termination condition. When we have a termination condition and it creates a full reversal, we call that termination condition a strong bottom. Or when that termination condition creates a full reversal from the top, we call it a strong top. So we have an area. Let's see if we can find an area that breaks and then unbreaks. Here we go. Price reaches support. All the trigger lines remain above this area, guys. This, in the moment, is an area that may reverse the market. It's an area that may stop the market. But look at the momentum. And guys, we used to have coffee mugs that said strong triggers break things. When you've got this much momentum coming into an area, it has the potential to break. And you're going to consider that area broken when both the small and the large triggers make their way through. So no short trades because we're at an area that may make the market bounce, guys. We're going to respect the termination conditions. When both the small and the large break through, you have a broken area, and you'll notice that support begins to act as resistance. And you're going to see it all day long. Price breaks through, support becomes resistance. Sometimes the market turns a little bit, especially in the wee hours of the morning. You're going to see resistance, weak triggers that pushes back. And you're going to constantly see, well, that was a big run up in the middle of the night, wasn't it? Look at how support holds. Look at how there's a fight between support and resistance as the market comes through. You're going to recognize these all day, every day, and you're going to be able to identify whether you have the advantage of a clear path or whether you need to just sit on your hands for just a minute. And right now, price has reached support. The trigger lines have not yet made it through. We're into a termination condition on crude oil. Do me a favor, give me a Y in the room if you're with me on this one. Price has reached support. In the moment, the trigger lines have not broken through. Guys, I don't have a clear path, so even with this odds favorable momentum, it's a little early to go short, but we're getting closer, right? So there's one other phenomenon that we're going to talk about, areas with the potential to break. When the small triggers smash through these one-to-ones and those large triggers are coming up like a shark about to breach, these one-to-ones represent an area that has the potential to break with momentum, but has not broken yet. So we're analyzing momentum, we're identifying an area, and we can say without hesitation that this area does in fact have the potential to break because of the momentum. So there's one thing that we're going to do. We're going to go and we're going to look at our 5-1 and talk about entries. And when we come back, I'm going to show you the absolute perfect entry. See the circle with the momentum? This is your 5-1 chart. Remember we talked about getting an entry on that smaller, faster chart. This represents the overall temperature of the market. Strong triggers, areas likely to break. On your 5-1, we're going to let that smaller, faster chart, we're going to let the smaller opinions of the market try and push that market against the overall trend. Try and push that market against the overall momentum. And this is what we call a retracement. When this retracement on the 5-1 with odds favorable momentum and a clear path on the 13-2 has an area of support inside of favorable large triggers for a long trade, guys, this is going to be your entry. We're going to pull back to these areas on the 5-1 when we have momentum, and this is going to be your best of the best. And I took a picture of this one because this is a perfect 50-50 setup, guys. And 50-50, I have to say this, 50-50 has nothing to do with your odds of winning. 50-50 has nothing to do with your chances of survival. 50-50 simply means that your small triggers have already made it through the area and your large triggers haven't been able to follow yet. The potential to break, but hasn't broken yet. So on our 5-1, when we talk about the perfect setup, we want to make sure that there's not a slowdown on your 5-1. We want to make sure that there's not divergence. I want to make sure that I have odds favorable momentum. Small triggers outside of the large triggers. And guys, I want to make sure per the rules that my areas of support inside of favorable large triggers are limited and consolidated to a small little point. My window of opportunity is small. This is a perfect 50-50 setup. This is a trade that has all the advantages that we need to enter the market. And then as we're moving on, we see the same thing, guys. Odds favorable, coming through, right? Let's go over entry rules real quick, because I feel like that's the one part that's hard to show in the moment, is how we get into the market, guys. So straight from the tutorial, straight from your educational materials, your rules for a high probability trend trade, teaching you how to read your indicators, how to understand where the market is likely to go using momentum and Fibonacci, where the market is likely to stop using those termination conditions that we just talked about, and where the market is likely to continue. And this is how we pick our entries. And guys, when those rules are met on the 13-2, your 5-1 chart is pushing up with strength, just like it was in that 50-50 trade. Rule number 3 for a high probability trend trade has us buying that pullback, that little retracement in price. And that pullback is going to begin with a down bar. One reversal bar, all of these up bars, all that momentum, everything pushing to the upside. Next-gen users, you are going to have the ability to identify where the market is likely to continue, and you're going to be able to pinpoint it by building a window of opportunity. When this reversal bar prints, you're going to identify your areas for potential trades. Areas can be a mid-band, areas can be Fibonacci support, areas can be one-to-ones. But the key is we want to see those areas inside of these favorable large triggers, these large triggers that are wide, angled to the upside, looking like a shark about to jump out of the water at a seal. Guys, this is your window of opportunity. This is your best of the best spot for continuation in the market. Your job as a confident rules trader is to activate a limit order right at the top of that window, to wait for the market to finish out that retracement, to push right back to that window of opportunity, and to put yourself into a long trade. With the advantage, I've got that one loaded up, John. You have the advantage of momentum via those trigger lines on the 13-2. You have the advantage of no termination conditions, making sure that there's absolutely nothing in your way, that that clear path is present. And then on the 5-1, that reversal bar pulls you right back to your window of opportunity. And guys, now you're long. And this is a trade that typically wins, has the potential to win 70 to 80% of the time. This is a trade where every indicator on every chart agrees with continuation to the upside. And guys, this is a trade that I'll take 1,000 out of 1,000 times, because this is my result more often than not. This is your entry for the high probability trend trade. This is refining that broad stroke of a brush. This is really getting you in at the best of the best spot. Initial stops will go below that window of opportunity. We're going to make sure that our stop, our protective stop, is where the market shouldn't go. And then once it heads in the direction, we'll reduce risk right below that reversal bar. So by waiting for the pullback, we reduce our risk and we maximize our profit potential. And guys, you're going to put this all together. I've queued up a lot of pictures today. You're going to put this together on 2 charts, just like we did. Rules met on the 13-2, strong trigger lines, no termination conditions. If I circle that tail on the 13-2 as a study guide after the fact, I can identify my window of opportunity on the 5-1. And notice how it's inside of favorable large triggers. Notice how this window of opportunity is small, and the market does in fact pull right back to it. No loss of momentum on the 5-1, strong triggers on the 5-1. Everything says this market is likely to continue. Next-gen users, you have the advantage of knowing where it has the potential to go, using Fibonacci, using momentum. You have the ability to understand where it's likely to stop, identifying these key areas, and then most importantly, you have the advantage of understanding where that market is likely to continue You have a very clear set of rules, a very well-defined set of looks. And with a little bit of study, you'll be taking advantage of these moves in the market day in and day out. And I want to show you the picture John just put in. He's saving me from having to search. I appreciate that. Who are you trading with or against? And I love this picture because your big charts define the areas, they define the direction, they define the termination. Guys, this is groupthink. This is Woodstock, 1969, thousands of people, all there to get something done. But we need those little antisocial people, right? We need those people willing to push against the big move. These are the guys that give us a retracement. Which side do you want to be on if trouble's brewing? Guys, we're always going to follow the large chart. We're going to let the large chart lead the way. Let the large chart create the momentum. Let the large chart tell us that there's nothing in the way. John, you have the biggest pictures. And then when the large chart says we're going and we're going fast, Nexgen users, you're going to take an entry on that smaller, faster chart and take advantage of that large chart mentality. Once again, crude oil, odds favorable, smalls through the area, everything says down. John, your picture's the only ones, I promise. Guys, look at how the market comes right back to an area of resistance inside of favorable large triggers. Let's blow this up. And take a picture. And guys, I'm going to respectfully ask you, give me a Y in the room if you understand what it is that we're looking at. I'm going to put a checklist right on my picture here. If you're using Snagit, this is a tool that you can use to police yourself, to check your rules, to make sure that you're doing exactly what you need to be doing. If you look at this checklist, let me see if I can make it a little bigger. My eyes are old. It says, is the market coming from a good top or bottom? Do I have a termination condition that creates a full reversal? Guys, up top, if I'm not mistaken, we did not. We didn't have one of those strong tops or bottoms, one of those perfect termination conditions, but that's okay. This one increases the likelihood of success, but it's not mandatory when you can check yes to these three. Did we have strong trigger lines? Per the rules, small is below the large are wide, they're angled in the direction of the trend. Guys, odds favorable for the market to continue in the direction of the trend. I can check yes. After I take this trade, I'm going back, I'm making sure that I'm doing things right. No termination conditions. The small triggers have broken through this cyan divergence low. The large triggers are smashing down with aggression. Guys, we're good. We're on one of those 50-50 looks. And look at this. No divergence, no slowdown. Strong trigger lines. Once again, textbook entry. Right in an area of resistance inside of favorable large triggers. And guys, if you got in just below 75 at 75.04, 75.05, your day is done on a 4 lot, right? You did exactly what you needed to do. You followed the rules. This is a high probability trend trade. I'm going to hit share. And I'm going to upload this picture to screencast because I just took this trade fictitiously. And when I took this trade, I wanted to make sure that I did it right. So guys, I'm going to post that picture right into the room, and I'm going to wait for a break in the action, and I'm going to have Mark, that's me, review my chart and say, yes, in fact, you're on the right path. You're following rules. You're doing it exactly the way we hoped that you would. And then look at the bottom. The trigger lines return. We're starting to lose momentum, right? We've gone from odds favorable. We're beginning to lose momentum. And we can identify that momentum loss on the 5-1 as well. I have a divergence, which means there's a loss of momentum. But look at how my trigger lines have gone from odds favorable to anything can happen. Let me push this over a little bit. This loss of momentum, with this loss of momentum, has given us a little larger push. You'll notice that my area of resistance is no longer inside of those large triggers. It's beyond. And the market is pulled all the way up to a mid-band, all the way up to resistance. And guys, here's another termination condition lesson coming right from the live market. And I want to take a picture of this one as well. This is what we call the gap theory. When price accelerates away, whoops, I got a double arrow there. That was kind of cool. Don't like the color. Let's make this super easy to see. When price accelerates away from these large triggers, reaches a Fibonacci area, mid-band, and the large triggers are more than a full bar away. And guys, I can identify more than a full bar away because this little white arrow is what we call a reversal bar marker. And this is where that reversal bar, where this up bar could potentially be a down bar. When my large triggers remain a full bar away, price is more than likely going to close that gap back to the large triggers. We're going Technicolor today. We're going to have some fun. This is what we call the gap theory. There's a great picture of it. I'm all about the pictures today. Price pulls away from those triggers fast and far. Large triggers don't follow. Guys, price is likely to snap back. This is a great picture once again. Put it into your screencast. Save this one. And here we go with the market fulfilling expectations, isn't it? No reason to look for a long, because the expectation is that the market's going to close that gap. When this pivot's not from a key Fibonacci area, very often that mid-band, that area of resistance, especially when the triggers don't follow, becomes a pretty fantastic bounce point to finish the move to the next key Fibonacci area. So guys, we're identifying termination conditions. Price breaks support, it acts as resistance. There's a beautiful entry. This entry was worth 30 ticks before the market began to turn. 30 ticks, guys, that's a $300 move. With the advantage of momentum, with the advantage of an area that is likely to break, and with a picture-perfect entry on your 5-1 chart. And now here we are again. There's that reversal bar. Here's your large triggers. So far below. No long trades. Even though the background's green, no long trades. If you're brand new, if you're focused on that every indicator on every market agrees for the trade, you're sitting on your hands and you're waiting for momentum. If you are a seasoned Nexgen user, somebody that's studied the patterns, somebody that recognizes when an area is likely to bounce, some of you got long right up here at 75.08 with the understanding and the expectation that this market may continue all the way to 74.60. But you're using your chart reading to identify that first trouble spot. Those large triggers, that green background, it's a great profit target, maybe for half your position. And then you're waiting to see if everything agrees again to give you that best of the best. Guys, give me a Y if you're with me on the gap theory. This is going to happen every day. You're going to see this. You're going to be able to keep yourself out of long trades. And ultimately, eventually, you may start putting yourself into trades that use that gap theory to get you back to those large triggers, because really, what's the distance? We'll just call it from 75.04 all the way back down to 74.81. That's a 25 tick move to close the gap back to those large triggers to look for agreement once again. So guys, we've done a quick little run through. We've talked about odds favorable momentum. We've talked about no termination conditions. We've talked about identifying the entry. Let's do that on this 50-50 trade. Guys, this is, whoops, what did I do? There we go. This is your class participation moment, guys. I'm going to get rid of this little cheater circle. And I want you guys to do me a favor. I want you new guys, those of you on demo, those of you on consistency, I'm not even going to cloud anything up. I'm only going to put triggers on this one. This is your 13-2 in the moment. This is your 5-1 in the moment. Guys, this is where I want you guys to work with me. I've got a lot of new people in this room. We want to identify the area where the market is likely to continue, right? Is everybody good? Rule number 1, give me a Y if we have strong triggers. If we have a market that is likely to continue in the direction of the trend. Small should be below the large. The large should be wide. They should be angled in the direction of the trend. Guys, this is your best of the best look for trigger lines. Rule number 2 says no termination conditions, right? I cannot have reached a Fibonacci indicator likely to stop the market. What are those Fibonacci areas, guys? Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, right? We're looking for that large chart midband if the large triggers are a full bar away. We just talked about that gap theory. We're also looking out for those divergence lines. Nothing in the way. Rule number 2 is met, yes? Everybody good with this? I have odds favorable momentum, and the market has not reached an area likely to stop it. Can we go and look for an entry? Rules 1 and 2 are met on the 13-2. The advantages are in place. I turn my attention to 5-1. And guys, I need one very particular thing to happen to identify my window of opportunity. I'm waiting for a reversal bar. As this market goes down, the momentum is there, the market is trending down, and I need a reversal bar on my 5-1. And this is where that fear of missing out starts to kick in. People start going, oh my gosh, there's momentum. There's nothing in the way. This market's going to go without me. And I see this a lot, guys. I'm just going to jump in because that market's leaving and I need to be in a trade. And then Nexgen users, you guys that believe, that have studied, that have gone through the process, you get a reversal bar. And at the time of this reversal bar, we're going to identify our window of opportunity. It's going to be inside of these strong trigger lines. Notice that both the large and the synthetic are angled down. They're wide, strong in the direction of the trend. My window of opportunity extends from the lowest point of resistance to the highest point of resistance. I have an 8-tick window where this market is likely to continue. I'm going to ask again, give me a Y in the room if you're brand new, if you're with me, if you're identifying this window of opportunity, because this is going to be your key to getting in where the market is likely to continue, guys. And this is just a matter of study. If you do this every day, this becomes second nature. Your analysis becomes almost instantaneous. And this is the best tool I've got for identifying these areas. So my rules say that I'm going to use a limit order. We're going to let this horizontal line represent a limit order. And I'm going to put it just below my lowest point of resistance inside of that favorable large triggers. Does everyone see what I've done? I've right-clicked on my chart and I've put sell limit. And this is an order, and this says if the market retraces back to this best of the best area, I'm going to be in a trade. So my only option now is to wait. Those of you that jumped in down here, oh, you're sweating it out. Here it comes, and I'm in the market. I have the advantage of momentum on the 13-2, guys. I have a market that is screaming in that downtrend. I have absolutely nothing in the way, which means that with all that momentum, there's no brick walls, no bumps, no speed bumps, nothing to slow it down. And I let that little group of people that believe the market should go up, fighting those strong triggers, get me right back to my best of the best entry. And now it's just a waiting game. I've taken a trade that 70 to 80% of the time wins. And my job now, my initial stop is up here, where the market shouldn't go beyond that window of opportunity. We'll put it up here. We'll do it visually. If I'm in at 06, right about here at 19, 12 to 14 ticks is typical when you enter a trade. But the moment I get a reversal bar in the direction of the trend from the area where the market is likely to continue, I can reduce my risk to a couple ticks above that reversal bar, which means I go from 12 to 14 to approximately 4 ticks of risk. I'm risking $40, and depending on your management plan, I'm risking that $40 to make 300 maybe. A lot of traders will get in at 06 and they'll take their first profits at 96. Whoops, and I just gave away the secret, didn't I? There we go. When that market reaches 96, they're $100 in the bank because they're brand new and they're only focusing on the best of the best entry. And they'll move break even. And they'll get that dopamine kick from the winner. And it makes it easy to hold that second contract looking for 86, looking for a $200 move with absolutely nothing to lose. And guys, more often than not, it's victory, it's targets reached. That's a $300 move, an entry where the market is likely to continue based on odds favorable momentum and nothing in the way. Guys, this is your best of the best. This is your trade. Let's go back to the live market. And look at that. No momentum, right? Absolutely no momentum. We're not looking for a trade just yet because I don't have the advantage of momentum and I'm kind of swimming in between. Just nothing to do. And that's okay because 90% of what you do is going to be chart reading. 90% of what you do is going to be sitting on your hands and waiting for the advantages to be present. Thank you, Claire. I'm trying to change it up a little bit. I'm excited about something a little different. Guys, I wake up every morning and I'm mesmerized at how accurate the software is, and I don't think I always, what's the word I'm looking for? I don't think I always express it as well as I could, so I want to make sure that I am. 90% of what we do is going to be reading charts. 90% is going to be looking at your indicators, waiting for those advantages, and when the advantages are present, then pulling the trigger. You will, if you're brand new, within a week, you'll be able to understand where the market is likely to go. You'll be able to identify momentum and key Fibonacci areas, and you'll be able to say that the market is more likely than not going to this key area, and you can use it for profit targets as you grow in your plan and create a management plan. You'll be able to understand where the market is likely to stop through those termination conditions, making sure that you never trade without the advantage of a clear path. And then where it's likely to continue, what we just did together, being able to identify before the market ever gets there, where that market is likely to continue from so that you can enter on a high probability trend trade so that you can give yourself those advantages. Guys, the S&P is on a slow grind, isn't it? It just entered or just opened. Potentially one small opportunity here. Let's see where that circle lines up. Did it make it to resistance? It didn't. Only 2 out of 3 rules were met on this trade, guys. It didn't make it to resistance inside of favorable large triggers, but we had strong triggers. There was nothing in the way. The market still continued down. I just have to be willing to accept that this wasn't my trade because I always trade with the advantage. You're seeing a different chart and was fresh. Here's what you saw after you said don't go long. See, Rob, I never say don't go long because I'll never tell you what to do. I'll say I don't have rules met. Rob, you're seeing a termination condition that creates the reversal back to the mid-band because the large triggers were a full bar away. You were patient. It tests support again. You let your trigger lines roll, fighting a little bit of momentum on the way down, but you're anticipating this area to hold based on your termination condition lesson, right? You let your trigger lines roll, letting you know that we're losing momentum down. Things are starting to change to the upside. And I think the most important part of this picture, Rob, and what I think you did best, is based on the trigger line location, that area is likely to stop the market, isn't it? So your stop has to go where the market shouldn't. And I think that's your biggest victory on this one, is you were able to identify where the market is likely to stop. No, My chart looked a little different, but I can look at your chart and understand exactly what you were reading, right? You get in, your stop's in the right place, you take quick profits. It is aggressive. And then you take your second contract right up here. These flat triggers, Rob, mean that you don't have the advantage of momentum anywhere. Just kind of flatlined. So you're kind of banking on an area to hold. It's not a high probability trend trade just yet, right? And it's not a 50-50 because 50-50 just means that one set of trigger lines have broken and one haven't. When we talk about the likelihood of winning a trade, let's go to and look at this. And Rob, I love that picture because it's a great chart read, right? And if 90% of what we're doing is reading our charts, it means that you're well on your way. It means that you're identifying areas likely to stop the market, just like we said you would. You're identifying areas where the market is likely to continue, but what you didn't have, can you tell me, Rob? What didn't you have inside of favorable large triggers? Didn't trade from an area. You trade just from synthetic triggers. And it pulled right back to an area, didn't it? That's really where that advantage comes from. But it's still a good read. But let's go and look at, gosh, I just went completely sideways for a second. What was I just talking about? Bum, bum, bum. You weren't comfortable in the trade? That's okay. If you're not comfortable in the trade, it means that you may be breaking a rule. And Rob, look at this. A little bit of patience. That's why I don't have areas, because I took them off. But just a little bit of patience. What a great lesson. And the market does pull back to an area inside of triggers, right? Right here at 85. You can go from maybe to rules met. On the ES, that's where I was talking. Here, let me put our indicators back on here. This is a crude chart. Rob, you posted a crude oil chart. This is what I was looking at. Same thing you were. Area likely to stop. A little shift in momentum. And then when everything starts coming through, it is directly into a termination condition, isn't it? We're still in an area likely to stop the market. Yeah, I didn't have support right there. My support's lower. You and I aren't lining up 100%. And I have Fibonacci resistance as well. I'm caught in an area where I don't have a downtrend or momentum to go short, and I don't have a clear path to go long. I'm very much in a holding pattern here if I'm a high probability trend trader. And this is one of those instances where I may employ the services of a higher time frame to see what it's saying. On this 21.3, guys, this is a higher time frame. You'll be able to look based on the patterns we learned on the 13.2 on the 5.1. You'll be able to recognize these patterns everywhere. So this is a 50-50 trade. Give me a Y in the room if you can identify. There's odds favorable momentum, but the large triggers haven't broken the area yet. And this is on a 21.3. This is a broader stroke than the 13.2. This is the next step up. Remember that we said on a 5.1 chart, if a 13.2 is 50-50, we want it to be perfect. So the same thing holds true on a 13.2 if the 21.3 isn't perfect. And guys, I don't have anything that says short trades into a termination condition. And I have a little bit of reversal, so it's giving some credit to this market potentially moving up. And now I have odds favorable momentum, everything going up. So Josh, 3 ways to see it. Price reaches, no trigger lines go through, absolutely no trades into that area. That's a termination condition. When the small smash through the area with odds favorable momentum and the large haven't made it through, this is an area with the potential to break but not broken. And then when everything gets through the area, then we consider the area broken. So it's easy to say, do I wait for both the big and the little triggers? Well, there's two things that we can look at. This is the smaller through, but the larger not. So this is an area with the potential to break, but it hasn't broken yet. I've set up a set of rules for myself, and this is a set that this is a plan that I put into action, or that I share with you guys, Josh. When I have one of those 50-50 looks, I prefer that there's no divergence on the 5-1. I prefer that there's no slowdown on my smaller, faster chart as I'm looking at an area with the potential to break. This is just kind of a very conservative approach to an area with the potential to break. And of course, there's more factors that go in the more you learn to read your indicators. What's the strength? What do other charts say? But see how this is an area with potential to break? Divergence prints twice, and it's already pushing past those areas inside of favorable large triggers. So Josh, for me, if an area has the potential to break but hasn't broken, I want my entry on the 5-1 to be ideal. I want no termination conditions. I want no divergence. I want strong triggers, and I want a tiny little window of opportunity. And we've already seen two great opportunities on a 50-50 this morning. No divergence, strong triggers, tiny window of opportunity. Did that answer your question? I've lost the advantage of momentum on an area that has yet to break. And guys, I'm telling you, this is a look that's going to keep you out of a lot of trouble until you can read your indicators well enough to make a decision about whether you have enough advantages in place to take that trade. So we've seen two things today. And Josh, when everything goes through, when we have momentum, there's nothing in the way. And guys, you have that perfect entry in an area inside of favorable large triggers. You have what's called a high probability trade. A high probability trade is defined as when each indicator on every chart agrees with the rules for the trade. Typically, this is when the triggers are their strongest, no terminations exist, there's no trouble spots between your entry and your target. Guys, this is your high probability trend trade. That's the one that typically wins 70 to 80%. That's the one that's going to teach you to read your indicators. And if you focused on that high probability, I'm on. Did everybody lose audio? Lost audio? All right. Where did my audio go? I'm going to mute. All right, can you guys hear me? Sorry about that, guys. I didn't touch anything, I promise. Yesterday I made a full meltdown, but today I promise I didn't touch anything. If you focus on that high probability trend trade, that best of the best, everything's good, everything agrees, nothing in the way. Remember, that's the trade that's going to teach you to read your charts. Joel. When you can read your charts, when you can look at your charts and you can make decisions about where it's likely to continue, where it's likely to stop, and where it's likely to go, guys, your world with Nexgen opens up exponentially, because now you're going to be capable of adding what's called a medium probability trade. And this is when most of your indicators line up for a trade. That 50-50 trade we were just talking about, where an area has the potential to break, guys, that's a medium probability trade, and probably the first one that you'll add into your plan. Most indicators line up for a trade, however, a small issue exists. Your ability to read your indicators, that study that you put in for the first 30 days, is going to have you identifying that small issue. In that last picture, it was an area with the potential to break but hasn't broken. And guys, this is going to be the vast majority of your trades. When executing medium probability trades, you're going to take these trades and manage them assertively. Your ability to read your indicators and understand change will allow you to manage them assertively. And if there's trouble in your way, you guessed it, your chart reading is going to have you identifying that trouble. It becomes a point where you can take off a portion of your trade, reduce risk to a zero loss level. So I always ask people, allow it to be simple, give yourself a little bit of grace and be a student for 30 days and learn how to read your indicators. Learn how to identify these 3 key concepts. And guys, then the doors open up and life really changes for you. 50-50 with divergence. That trade doesn't work out, right? Now we have resistance with every trigger line beneath. We also have support with every trigger line above. If I do a snapshot right here, let's talk about termination conditions real quick. If you're a high probability, everything in your favor, is there a long trade to be had? Guys, give me a Y or a no. A Y or a no. A Y or an N. Do I have momentum and a clear path? Josh says no. I'm inclined to agree with Josh and commending his bravery for being the only one to answer the question. Joel, good job. All right. So what about short trades? The background's red. Can I take a short trade? I mean, I can do whatever I want. But are my rules met for a high probability trend trade? Smalls aren't green, right? No. And most importantly, Josh, I have an area of resistance with every trigger line above it. I have an area of support with every trigger line above it or below it. If I'm a high probability, everything in my favor, nothing in my way trader, guys, these are my options. Because there's only 2 options for me as a new user learning to read my indicators. Either my rules are met, my rules are not. But here's the great thing about being new. Are you ready? If you think you saw a short trade, take it. Post a picture in the room. Whoops. If you thought you saw a long opportunity, post it. Put it in the room. We'll talk about it. But do you see how it becomes a simple... We can identify areas likely to stop the market, and then we can use rules to establish when they've broken to give us an advantage. I love it. I'm excited about today. Today is good. Guys, that's crude oil. I'm going to leave it alone for a second. What's the S&P doing? Well, the S&P hit an area of support. Absolutely none of the trigger lines made their way through that area of support. What do we call that? What rule has not been met for short trades? Shark fight. It's rule number 2, right? Termination condition. Absolutely. Guys, use the language over and over. Good morning, Mike. Termination condition. Termination condition has a very ominous feel to it. It lets me know this is an area where the market is likely to stop. And you know what, Ziba? It will. Unless you speak Chinese, and then it'll be perfectly clear. But in the very beginning, Ziva, what day are you on? Can I ask? Well, I can. Will you answer? I'm going to show you my favorite picture on the internet. The question is, what day are you on? Is this day 1 for you? Day 2? Day 3? Awesome. Day 1. So Ziba, you're right where every one of us have been at some point. And there's people in this room that are on day 1, and there's people in this room that are on day 1,000. But in the very beginning, it feels like you're drinking from a fire hose, doesn't it? It's like, oh my gosh, there's so much information to take in. I promise, if you keep asking questions, you pay attention, it takes about 2 or 3 days and things really start to click. And absolutely, welcome to the class. And if you focus on understanding the best of the best, focusing on these three simple rules initially. I promise you, I'll stick with you all the way to the end and make sure that you're comfortable with anything and everything that you're seeing. There's also on Discord, when you made your way in, there's a self-training guide. And I love this section in Discord because this really maps out your path, what you can look at maybe in your free time, and you can bring your questions to me in class. I'm here for 15 hours every week, and the only question that I won't answer is the one that isn't asked because I don't know about it. But here's a very clear path, links to your user guides, the rules, and this is going to get you where you want to be. And we always focus on keeping it simple, talking about chart reading, and then we will expand as you expand. And then Mike, and just so you guys know, Mike's been with us about 9 years now. Following trend trade rules, $800 a day is $320 a month on a 20 lot. You're a millionaire in 3 months. I love it. 10 years now, Mike. I've been teaching this class too wrong. I'm still stuck, or too long. Not a one lot, guys. Not a one lot. But those same simple rules that teach you to read your indicators are the same simple rules that through a little bit of compounding grow. One lot can be $800 a day, right? So I know you're doing it. Doing it for fun. I love it. How's Apex? Are you enjoying Apex? Have you broken their system yet? So guys, termination condition. Termination condition creates a full reversal. Full reversal gives us odds favorable momentum, but we've got to let the areas break, right? We've got to get those trigger lines above that potential area of resistance. And you can see that they're fighting. You can see that fight right at a key area, guys. And this is one of the things that Nexgen provides an advantage of. The crowd knows where these key areas are. So do you now, because you have Nexgen. You can identify where the market is likely to stop. You can wait for the advantage of momentum and a clear path. You can wait for your trigger lines to all be going the same direction with momentum, and we'll get you into that market. So, guys, that's my first hour. It's a lot to take in on the first hour, right? We've talked a lot about momentum, identifying strong trigger lines, giving us the best look. We've talked about being able to identify a termination condition, where the market is likely to stop. You can see both of them right here. And then ultimately we talked about where the market is likely to continue. And once again, there's that 50-50, divergence prints, trigger lines don't agree. You're still in a holding pattern. And sometimes it's frustrating for new users. But Mark, I don't want to read indicators 90% of the time. I want to trade. I want to be excited. I want to move. Well, there's smalls breaking above the large, right? There's the large coming up through the areas. There's an area of support inside of favorable large triggers. Guys, I'm going to take a small break real quick. I'm going to go refill my water. When I come back, the second half of what we do, Zeba, and you other people on demo right now, is I look at everything that you do. I look at the charts that you post, and we come back and we look at them together as a classroom. We talk about advantages. We talk about disadvantages. Claire, I think you've posted this picture twice. Let me take a look real quick. Would this be a weak top if in between fibs? And let's answer Claire's question real quick, because this goes back to termination conditions. Claire, absolutely. So in this instance, when everything breaks through, it's not the best of the best. It's not the strongest top. It doesn't mean that the market won't go down, right? So everything breaks, the large triggers break, and then here they unbreak, if that makes sense. And they start working their way down. And then when it retraces straight to resistance and nothing blinks, this is a great indication that the market's probably going to continue down from an area likely to stop the market. I don't consider this my best look for a termination condition creating a full reversal, But this is a little bit of overrun, right? It's a little bit of overrun on a Fibonacci area, which is going to happen from time to time. But Claire, when I'm talking about a strong top or a strong bottom, let's use that S&P for an example. This is the absolute best look. That's the game changer. And guys, it hit Fibonacci support to the tick. That's my strong top or strong bottom. This is a relatively weak top. Once again, there's a strong bottom, and look at what happens. A little bit of overrun, but it breaks, and then it unbreaks, and it pushes all the way down. It's a good looking termination condition. That's a good looking termination condition. For me, the fewer triggers through a fib, the better I feel about that area. But remember, just because it's not a great top here and it is a termination here, we're still reading our indicators. Price pulls right back to resistance. Nothing blinks. Everything stays down. Momentum stays down. In the war against buyers and sellers, the sellers have a very decided advantage right here. Does that help, Claire? And not just Claire, anybody. Guys, when a picture is posted, it's for the class. It's not just for the person that posted it. I'm going to leave you with the S&P. I'm going to let you watch this fight in between buyers and sellers. Awesome. I can't go short with a green background with no momentum, but I can't really go long against an area likely to stop the market. We're in another one of those holding patterns, and you can create a very definite area that needs to break before the advantage is present. Guys, I'll be back in just a minute. All right, y'all, let's get back at it. I'm having way too much fun to take a break. Resistance holds, right? Triggers try to make it through, can't really do it. Divergence prints, triggers don't match. Guys, you're watching that fight. You're literally witnessing that fight between the crowd, between the large crowd. The buyers and sellers are duking it out. And it doesn't matter what the small crowd thinks when the large crowd can't make up their minds. Straight into support, straight into a cyan divergence low. Guys, we can identify without question what areas need to break for us to have a clear path. Nexgen does this for you, guys. You just have to learn to read it. And what this does is it keeps you from making decisions on a small chart. Has anyone ever been chewed up in what they call chop or consolidation? You get caught thinking, man, it's going to go up, it's going to go down. I don't even know. I'm trading off a magenta midband. I'm trading off a green midband. Rules 1 and 2 are going to help you avoid that, guys. A few broken keyboards. Yep. So guys, this is a part I'm going to go through. Let's start looking at some of your charts that you guys posted today. We started getting them pretty early. I love it. Gary got us going today. One of the things that I love to see on Gary's is Gary uses a checklist. Every trade that he takes, every time Gary takes a trade, he has a very rigid set of rules that are going to get him in. Odds favorable, 50-50, no divergence. He lets market flow give him a signal. Confirmation costs you 10 ticks, Gary. That's a lot of confirmation. And this is where, and I love this, and Gary's been with us for a while. He's an amazing chart reader. Gary, when you're looking at this one, 50-50, no divergence, strong triggers, everything says up. This is such a great look that I literally took a picture this morning because that's the perfect setup. That's the setup that even new users like to get in right at the area. There's so many advantages, and especially, Gary, even your 8 range chart is odds favorable. That's the one without hesitation. First date, no worries. So if you're cautious, that's good. First trade day of the day, cautious is good. And then let's go to the other side of that. Is it cautious to be so far from the areas when the area hasn't broken? Is it cautious to add that much risk when an area hasn't broken? This is one of those ones, and this is a good example. Odds favorable, 50-50, little window of opportunity, odds favorable, no divergence, strong triggers, everything up. For me, it's more cautious to get in at the area with a reduced risk, with more profit potential, because if things change and this area decides to hold as it did with that divergence, well, I've already made my money and I've got very little risk on the trade. So 2 ways to look at it. Neither is wrong. Guys, I'm never in the business of telling you that what you're doing isn't correct, but I will always give you my 2 cents if I see there's a way that I think you can do it just a little bit better. Maybe you can reduce your risk. Maybe you can increase your profit potential. And maybe we can just help you recognize advantages a little bit as they're in place. That's exactly what this classroom is for, guys. 15 hours every week, live feedback. Luciano came in. He says his 13-2 triggers are up strong. He says everything is strong. Beautiful entry right at the midband. Profits. Took $200 at the top. Divergence prints. Gets another 11. So exact same trade. 2 different ways to take it. Neither is wrong. Luciano in at the area. Gary waiting for confirmation. Neither is wrong. And there it is right there. And you can see very different results but neither are bad, and both resulted in profit. Nice job, guys. Ron C., as you grow with the software, so does your plan. Did you really annotate that, hubba, hubba, hubba? Guys, Ron C. has taken an approach where he identifies termination conditions, where he identifies momentum on everything. Every chart agrees, freight train of momentum. He'll take an entry beyond his trouble spots, and he'll take an exit before he hits the next trouble spot. Not a high probability trend trade, but an amazing chart reading, right? Everything says down. Momentum is down. We're coming from resistance. Every area is cleared. Odds favorable momentum. And he just takes a chunk out right in the center. It's a different approach to trading, but I'm a big fan of it. It's great chart reading, being able to use the Nexgen indicators to profit. This is a 21.3 on crude. Pivot stop out. Just a termination condition on that higher time frame is enough to keep John Novak out of long trades on a smaller chart. Luciano, let's see what you did. It's the exact same trade that we did together in class, guys. The more you study, the easier it becomes to recognize. Odds favorable momentum, triggers down. Smalls have broken through the key area. No divergence. Rock star entry. Right at that resistance. Hey guys, that's from 06 to 95. 19 ticks. Nope, 21 ticks. Let me do my math. And then another 30 going to the bottom. Luciano, amazing trading. Nice job today. And then Claire, we answered your question about the good top or bottom. I apologize for that taking so long. Gary coming through with a trade. Does everyone recall when we talked about gap theory in the room, right? We talked about that gap theory. We even had a picture of it, didn't we? Recognizing patterns when price reaches an area, when the large triggers don't follow. All these coming together. And I said it's not a trade opportunity yet, but when you grow with the software, it may become one. Guys, here's somebody that's grown with the software, that identified the gap theory, created expectations based on patterns, waited for market flow to give a reversal bar, this 8-range chart, entered on his 5-1, and took profits all the way down to those large triggers. Gary, what a great chart read. Great execution. Not a brand new user trade, right? There's some chart reading that goes on here. But what great execution and what aggressive exits at the trouble spot. I wasn't sure if anyone was going to take that one, Gary. Nice job. That's solid trading there. Amazing chart reading. And then loss of momentum at support. Just doing some chart reading, saying, you know what? I'm losing advantages. I'm losing momentum at an area that hasn't broken. I'm getting slowdowns. My trigger lines don't look good. This is Gary. Just, guys, when there's not a trade to be had, take a picture and talk about why there's not a trade to be had. Reinforce your chart reading. Terrence, let's see what you did. Terrence, loss of momentum at an area that's not broken. And I kind of like the way you did this. So there's two sides of the coin here. There's an area with the potential to break coming from a great top with everything down and almost through, right? And guys, then there's just the idea, the chart reading of identifying an area likely to stop the market. And when his price pulls right back to resistance and every trigger line is below and it reaches resistance and everything is below, Terrence says, because of the great termination condition that caused the full reversal, that gave me momentum, that has all of my triggers down, and I have an area likely to stop the market if it retraces, he takes an entry and goes down. Terrence, great job. Great chart reading once again. Not a high probability trend trade, right, guys? It's okay if it's not a high probability trend trade. It doesn't have to be when you learn to read your indicators. But until you learn to read your indicators, you're giving up advantages. Buffalo hands. I love the name. Makes me smile every time. Odds favorable momentum, right? Everything is up. No termination conditions. Everything is up. Buffalo hands in a little late. Are you with me in here? Because this is an amazing opportunity for a little bit of a lesson for the whole class. And especially for you guys that are working on your rules. You guys that are working on identifying, understanding the advantages. All right. Buffalo hands, do you have a copy of this checklist? And this isn't just him. This is everybody. Guys, you'll find that I identify or I kind of call out whoever posted the picture. Because this is a high probability trend trade checklist. I'm putting it in the room for you. Download it. This is a good one. I'm going to put the same checklist on your chart because what this does is this helps me understand and identify when the rules are met, when the advantages are in place. So is the market coming from a good top or bottom? If I'm not mistaken, it was a good bottom. But just in case, I'm going to put no because remember, it increases the likelihood, but it doesn't. It's not mandatory. So Buffalo hands, you had odds favorable momentum. Smalls above the large are wide. They're angled in the direction of the trend. Rule number one for a high probability trend trade has been met. All my new users, give me a Y in the room. If you're with me, if you see it. All we're doing right now is we're using a checklist to make sure that we're following rules, to make sure that we're getting the best chance of success here. No termination conditions on the 13-2. Once again, for the win, Buffalo hands. I just want to say it as many times as I can. There's nothing in the way, right? Absolutely nothing in the way on this trade. Clear path. Everything says up, and it says up with momentum. And Buffalo hands, this is where I believe we can change that P&L quite a bit. Rule number 3. Use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And Buffalo hands, I know that you're still pretty new and you're right where you need to be. True story. You are rock solid on where it is that you need to be as a brand new user. This reversal bar signals the beginning of a pullback. That small retracement in price, remember that's the small crowd saying, nope, we want it to go down. But the big crowd says, odds favorable, nothing in the way. Buffalo hands, your best of the best entry was at this area, right there at the large triggers, right here at about 75.36. Is everybody with me on that? That's your rules-based entry. So that's $130 difference between your entry and between the rules-based entry. And it's okay because this is pretty normal. In the beginning, you're like, I think I see it. I thought I saw it. Oh crap, that was it. Pretty common. But imagine, instead of making 6 ticks, you make 19 ticks. Instead of risking $150, you're risking $50, right? Rule number 3, where the market is likely to continue, helps reduce risk, helps increase profits. And then the next step is identifying this odds favorable momentum in a market that's likely to continue. So Buffalo hands, great recognition, rule number 1. Great recognition, rule number 2. Rule number 3 could have changed your day. Rule number 3, getting in at 34, getting out at 54 is $200 compared to the 60 that you pulled off. Nice job though. Great chart reading, great setup. A little bit of refinement on that smaller, faster chart is a game changer for you. Thank you for posting. And guys, once again, if anyone posts a chart, I talk about it, you have a question, just let me know. NG time, odds favorable on the 13-2. Smalls above the large are wide. You cleared your 1-to-1s. There's that pullback right to the mid band. Buffalo hands, exact same trade. Little different entry. In at 37. I said 36. 37 is very appropriate. Looking for $100. Looking for $200. We know that those got hit. I'm not sure if it made it to the next one. NG time, perfect execution. And then Gary taking the exact same trade. Guys, you're making me proud this morning. You're welcome, Buffalo Hands. Odds favorable, no termination. Look at these entries, guys. There it is right there, NG time. Termination condition. Your large triggers didn't even have to reverse. They were already going up. So pretty amazing once again. Rules met 100%. Give me a Y in the room if you see it. Odds favorable. Let's see, good top or bottom? Gary says yes. Termination conditions on the 13-2. Using that checklist. Gary says no. Odds favorable? Absolutely. Anything can happen or 50-50. Gary, that should have been a no. Area for entry inside of favorable large triggers. Heck yeah. And then Gary's using that 8 range to confirm the momentum as well. What a great trade. In at 34, right at the mid-band. There's $150, $150. So we're up to 300. There's another 24, up to 550. And that last one was another 35. $900 trade, guys. 100% rules based. Is there anyone else that wants to do this? Is there anyone else that needs to learn these setups? Understand the advantage of momentum, the advantage of a clear path, using key Fibonacci areas, eventually, Mike, to create great targets, using Fibonacci areas inside of favorable large triggers to create awesome entries. Guys, we're going to do this every day for the rest of your lives until we buy Nexgen Island, funded by you guys. We have a pina colada. Joel, what'd you do? Joel, trying to figure out where your entry is. Everything says up, right? No termination conditions. I'm trying to line up your timestamps. Joel, where's your mid-band? Joel, where are your indicators? What areas are you trading from? Because if I'm not mistaken, this is the same trade everyone else took, yes? Maybe it's different. But I don't see mid-bands, Joel. I don't see Fibonacci anywhere. I don't see 1-to-1s. Guys, if you ever lose your indicators, right-click and reload the template. Because how can you trade from an area inside of favorable large triggers if you don't have any areas? So, and Joel, if you need help, grab tech. But I think that having your indicators probably keeps you in this trade. Good stop placement helps you out. Waiting for that reversal bar. Hope that helps. Gary, we already saw that one. Perfect entry, great exit. Gary's so proud of it. He's going to keep showing it. I love it. $1,800 is livable on 2 hours of your life working, isn't it? Ed, nice to see you in here. Good top, small below the large, larger wide. Oh, it missed you by a tick. It happens sometimes, doesn't it? Remember, guys, if your rules aren't met, let it go. And it's frustrating sometimes. But if your rules aren't met, chasing increases risk. Chasing reduces profits. Ed, great restraint. Your rules provide an advantage. That advantage is what you need. And then here it comes. Smalls below, large above, smalls outside, area inside of favorable large triggers. You even get a market flow signal. Ed, you're pulling that stop up so tight, so fast. Three points and 2 points. And then out for break even on the last one. Bailed, no follow through. Ed, are you with me in here? Can I address? Bailed, no follow through. And I like it. Notice that higher divergence, small triggers up on a 50-50 trade. Just for the people that are new, momentum is down. This key area hasn't broken yet. Guys, remember the no divergence, perfect entry. It missed them by a tick. But if you're in at 11, that's 5 points all the way down to 406.50, right? Or 4.5 points. A lot of profit to be had. One divergence reduces the likelihood. Two divergences and the triggers working their way inside. Ed, great read. Great read, great management, quick profits. I like everything about the trade. And it doesn't look fear-based. It looks very pragmatic. Nice job. And then Joel. No worries, Joel. Did you get it back? Now we have some indicators. It wasn't a mistake. It's just one of those things that happen, right? The longer you're with the software, the more you're going to recognize if I have to have an entry at an area inside of favorable large triggers and for some reason I don't have an area, I have to rectify that situation, right? I like this picture. Joel, I know you're not taking a trade here, but man, this is a good one that gets new users, isn't it? And these aren't the same timestamps, but I want to look at it. If I have an area inside of favorable large triggers on the 5-1, new users are going to say, go long, go long, go long. But if my 13-2 doesn't support it, guys, don't get suckered in by a small chart, by that small crowd, right? Don't let the few convince you to do things that the many don't agree with. That's a good picture. How we doing? What's the market doing? Guys, you know that the Feds talk at 12:40, right? Look at the fight. Guys, you're identifying the fight right now. You are seeing a market that is doing its best to get between areas. Next-gen users knew about this area long before we got there. They said this support with no triggers through is likely to hold. You guys were able to identify that this resistance with no triggers through were likely to hold with the large triggers so far away. This 1-to-1 with every trigger above it, likely to stop the market. There were a couple divergence on that 50-50. Next-gen users knew that's not your trade. Then once again, back into support, back into a mid-band. Guys, do you see the fight happening here? Do you see how you're able to identify it through rules? From a most basic standpoint, during times of consolidation, your rules are going to keep you safe. John posted the crowd picture. This is my favorite analogy. It's the same thing as the crowd, but this one makes me giggle, so I'm going to share it with you. Sharks are the crowd, guys. Sharks are the big money investors. They're those guys with the deep pockets, the guys that create tops and bottoms. If you think of yourself as a remora, if you think as yourself as the person, the animal, the whatever you want to call it, that waits for this guy to get the hard work done so that they can feast, guys, that's a next-gen user. Next-gen users let the sharks put in tops, let the sharks put in bottoms, let the sharks establish momentum, right? And then next-gen users take advantage of all their hard work all the way to that next key Fibonacci area where the sharks are probably going to go at it again. Does that make sense? You don't have to be first to be profitable. You don't have to be the first one in. You don't have to be the last one out. But when you trade a chart where every chart says up, where every chart has momentum, and you've got that great spot for entry, guys, you'd be amazed at what you're capable of pulling off with the software. Here's crude oil. 50-50 trade, right? Smalls below, large above, divergence prints, and it goes right beyond those areas. Probably stopped you out, made you a little frustrated, and then it comes right back in. No momentum. A simple rule helps there. And guys, I'm going to go now because right now, live charts, I don't have rules met. Does everybody understand that? I don't have rules met. There's nothing for me to do as a high probability trend trader. So let's talk about pointing you guys in the right direction. And folks like Ziba that are brand new, this is going to help you out. And I'm going to post this in the room after we review it a little bit. I'm going to try and bump it up just a little. There we go. Guys, this is an example of how to create a plan that keeps you on the right side of things as a new user. This is an example plan of how to make sure that you have advantages in place. And it really starts, and I believe this, trading is a very solitary sport. It begins with personalization. Using possessive language. My trade is the high probability trend trade. And the only thing that this example plan is doing for me initially is identifying my perfect entry, my area where the market is likely to continue at an area inside of favorable large triggers. So I'm going to use the phrase, my trade is the high probability trend trade. In order to enter this trade, I must have the conditions of this checklist met. Is the market coming from a good top or bottom? Do I have odds favorable, no termination, area for entry inside of favorable large triggers? I'm about to give it to you, Ziba. And I'm going to do one better. I'm going to give you this example on how to write a plan. I'm going to give you a copy of the checklist that's written directly into the plan. And then right now, let me give you one more treat. Because guys, I'm all about checklists. I'm a big fan. I'm also going to give you a checklist, and this is great for new users, that not only talks about the conditions, but I'm going to give you pictures. That's the one that I just put in the room, straight from the user guide, straight from the manual, so that you can begin to identify what these look like visually, so that you can get to where you can see them in the moment. And it's going to take a little time, but you're going to get there. So my trade's the high probability trend trade. This has to happen for me to pull the trigger. And then we take a lot of pictures. I'm going to put pictures of my best of the best into my trading plan. I'm literally going to come through and identify what my best trade looks like. And then I'm going to put those pictures also. Ziba, you have this one, Nexgen Study Picks. But there's a trade tracking sheet that Nexgen provides, and it's got 3 tabs on it. It has the tracking sheet tab where every time you take a trade, you're going to put it in, and you're going to be able to go back and study what you've done to help you do it better. It has a section called My Personal Trade Setup Look. So when the conditions of the checklist are met and you take that great picture, you're going to put it into your trade setup looks. And then guys, I don't want you to ever feel like you're doing this alone. Here's 70 pictures of a high probability trend trade setup that you can go back and study and compare your pictures to. All of that's on the checklist or on the spreadsheet. If I pull up my spreadsheet, you can see where I've tracked each trade. I've gone green and red, winners and losers. I talk about whether I'm nervous or confident or jumpy or relaxed or frustrated. I talk about maybe a little note that I can put on there to help me do it better. But most importantly is I have a link to the picture that shows me exactly what I did. And you'll begin to recognize patterns. Traded into a termination condition and I lost. Traded into a termination condition and I lost. Into a termination condition and I lost. I begin to recognize patterns where I'm breaking rule number 2, and I can commit myself to focusing on following rule number 2. I've absolutely saturated mine with my best of the best looks. I have zero questions about what they are. So when I write my plan, I'm going to put a couple of those pictures in here. This is exactly what it's going to take to get me in the market. This picture is compliments of Gary. It doesn't even have to be my picture. I see small below the large. I see that odds favorable momentum. I see absolutely no termination conditions, and there's that beautiful entry inside of favorable large triggers. My goal as a brand new user is to repeat this look as many times as I can until it's committed to memory, until I can catch it in the moment. And following this simple checklist, having this little plan in place is going to allow you to do that. Notice that this is your entire trading plan for the perfect entry, guys. It's a quarter of a sheet of paper. And then as you get into medium probability trades, you have to add to your plan, right? Now you have to say, well, if an area has the potential to break but it hasn't broken, I want no divergence on my 5-1. Guys, this is a crazy conservative approach. I want small triggers outside of the large on my 5-1. Ziba, steal this plan and make it yours for the first 30 days. And then you'll grow. And then once again, I take a picture. What's my perfect 50-50 entry? No divergence, strong triggers, tiny window of opportunity. I am defining 100% what it's going to take to get me in the market. You want that last picture, Gary? Here you go. I'll give you a copy in the room. There's a copy of a perfect 50-50 trade. And then Gary, if you're doing 50-50 study this week, watch this. Which earlier one? The trend trade? It was yours. That's back when your checklist was simple. This is one of your old trades. I recognize the annotation. Sure was simple then, wasn't it? 4 things to get in. So once you've defined your entries, guys, it's your chart reading that's going to allow you to manage. It's your chart reading that's going to help you get out at appropriate times. It's going to help you reduce risk. On this example plan, I've given you the most mechanical approach I can come up with. Trade 2 contracts. My initial stop will be 12 ticks. That's going to be my input into my ATM strategy. I'll move it 2 ticks above or below the reversal bar in the direction of my trade. Oh, I'll show you buffalo hands. I'll take profits at 100 and move my stop to break even. My second target will be $200. Guys, there's no room for opinion. There's no room for anxiety. There's no room for anything other than 100% mechanical, and we'll look at it. Buffalo hands, to activate a limit order, if I am below the current price waiting for a pullback, I can right-click on my chart and I can hit buy limit. And what I'm saying is that if the market pulls back to this area of support inside of favorable large triggers, I want to be in it. The other side is if I right-click above price, sell limit 1, and now I'm waiting for the market to come to me for my entry. So when we're activating a limit order at the area of support or resistance inside of favorable large triggers, that's how you're going to get it on there. Does that help? So hypothetically, termination condition creates a full reversal. Full reversal gives me odds favorable momentum. Odds favorable momentum, not into a termination condition. If these large triggers come up, can't I identify an area of support inside of favorable large triggers where the market is likely to continue? Pretty outstanding, guys. It took me 3 seconds to do that. It's not about the 3 seconds that it takes to get to that level of reading. It's about the time it takes to be able to do it in 3 seconds. Anybody ever paid $1,000 to a plumber for a job he was able to fix in 20 minutes? And you're not paying him for the 20 minutes, you're paying him for the 20 years it took him to be able to do it in 20 minutes. From the time that he invested, from the study, from all of that. So, yeah, and Buffalo Hands, I think that that limit order is going to help you an awful lot getting those better entries, because now you're just waiting, right? You're like a leopard in the wings, waiting to pounce. Guys, crude oil appears to be changing direction. Termination, full reversal, odds favorable. Let's see what happens. What's the S&P doing? Guys, they're still fighting, aren't they? Josh, I care about everything. I'm a very caring person. Rule number 2, Josh, says that if I reach this divergence high and none of my trigger lines have broken through, then I have a termination condition. Okay, so I'm going to go simple first. 100% textbook from the manual. Rule number 2 says that if I reach that magenta divergence high and none of my triggers go through, it's a termination condition, right? For the brand new user, no trade to be had. Give me a Y in the room if you're with me on that. I ask that a lot, guys. I love the letter Y. It makes me happy. Textbook termination condition, right? But you guys are all going to be chart readers, not day traders. You're all going to be assessing information and determining whether or not your rules are met. So when you put the buy order, you were just saying as an example, absolutely, Josh, that's all it was. So now we've reached that. Look at it to the tick. This is where your chart reading comes into play. And guys, I'm never advocating trading into termination conditions, but the reality is you're going to get so good at reading indicators that you may say, when I'm coming from a great termination condition, when everything is screaming up, when triggers are one on top of the other, when my window of opportunity is virtually one line, when there's no divergence, when my triggers are strong, guys, believe it or not, there's people that have taken this picture 1,000 times and say that they're willing to take that trade. There's also people that say, absolutely not, I won't take that trade. There's people that will go to a 21-3 chart and say, well, if my 21-3 supports more up, I'll take that trade. Can we all see that the 21-3 clearly does not support more up? Josh, do you see what I'm doing here? There's other people that'll say, well, if that 21-3 is kind of slow, I'm willing to pull up an 8 range chart. And let me get my market flow on there. I'm willing to pull up an 8 range chart with market flow. And let's say perhaps my market flow chart gives me a signal at that area with that momentum from that great bottom with odds favorable momentum. Well, then I'm willing to take this less than appealing shot because of all the conditions. So in the beginning, brand new users, it's your job to have the advantage of momentum, a clear path, and an entry where the market is likely to continue. As you grow with the software, you'll begin to recognize more and more advantages. You'll have 1,000 pictures. And I want you to see what's happening. If you're using an 8 range chart, You're saying I'm waiting for a market flow signal. And a market flow signal might be one of these magenta arrows in a short trade, a green arrow for an up trade, a reversal bar. But look at how the market is pushing below that midband. Look at how your market flow chart is still going. Ziba, it's a confirmation tool. New users are going to have everything that they need on 2 charts, but the patterns that we teach on these 2 charts, Ziba, they work on any chart. You can identify momentum and termination conditions on any chart using the patterns. And then we have this 8 range chart. It's a market flow chart, and it becomes a confirmation tool when the rules are met. So first you have to understand the patterns, then you have to understand the rules, and then you can incorporate this chart, and you'll notice even this chart said more down. So you had 1,000 reasons to not get run over on this long. Does that make sense? So Josh, I respect the heck out of these initially. And then as you grow with the software, there's a set of maybe larger charts and then other charts. Bobby T, it all revolves around buyers and sellers and where they are accumulated within the bar. If you go through the market flow volume analysis video, watch it, come up with some questions, and then Josh, I never deflect, but in this room, there's so much information on that market flow. If you take a couple pictures, you'll see different things. Initially, it's confirmation, right? And then as you begin to understand confirmation, the next, using dots, is I like to look for dots that are stuck at the bottom or the top. This is what we call a stranded buyer. Hey, Sam User. Nice to see you. Great test. These dots mean that there was a consolidation of sellers at the bottom, but the market ended up going up. There was a consolidation of buyers at the top, but the market ended up going down. You can see the highest volume area on a bar in between these black lines. And these are just concentrations of where there were either more sellers or more buyers. I don't pay attention to these dots so much. Not yet. As you grow with the software, you will. But initially, it's all confirmation. And I like to use it first as a confirmation of momentum. And then after that confirmation of momentum, I may use it as a confirmation in an area for a potential trade. And then I may use it to help me identify potential turning points in the market. What do we see now? Josh identified the termination condition. And Josh, yeah, sometimes on a 13-2, initially, just don't trade into termination conditions, right? What a great way to keep yourself safe. But as you grow with the software, your opportunities grow exponentially. Some people add more charts and just get confused. Some people add more charts and they excel. Some people keep it simple and make more money than they could ever spend. Some people make it complicated and do just as well. You'll figure out what works for you. You'll figure out the plan that's best for you, but you don't have to figure out it. You don't have to figure it out in the first day, right? I'm going to give you one. That if you focus on this super simple for 30 days, you're going to learn to read your indicators. You're going to learn to recognize advantages. You're going to learn to enter the market. Once again, Josh, 50-50, area with the potential to break but hasn't broken. Divergence prints on my 5-1. If I'm trading that super simple plan, right? It simply means that my rules aren't met and I don't have a trade to take. As you grow with the software, you may go through that same process. Well, 21.3 is strong down. You may look for confirmation on an 8-range chart. If I get a market flow signal at an area after divergence, Maybe I'll give it a shot. My rules say don't. Who was asking about the dots on the bars? Bobby T? One tick from Fibonacci support. Do you see how your sellers tried as hard as they could to push down and got stranded? Notice how there was a loss of momentum on this chart as well. That's a pretty key indicator that we're probably going to push up. Because the sellers tried, they got one tick away. And now the market's starting to move up. We have an area that hasn't broken just yet. There's an area inside a favorable large trigger. Some people may say, if this becomes a market flow signal, I'll take the trade. Once again, it doesn't become a market flow signal. Not in the trade. Another loser avoided, guys, thanks to rules. Isn't it amazing that you guys have this at your fingertips? You guys have the ability to recognize momentum, a clear path, and the right spot to get in. And all you have to do is practice. All you have to do is put them together. Guys, I put that example plan in the room for you. If you've never written a plan, I want you to do me a favor. I want you to write one out. I want you to put your name on it. I don't care if you copy mine. Give yourself something to commit to every time you pull the trigger so that every trade looks the same. You can create confidence through the repetition. Sam User, that's an amazing picture. Thank you for posting that. I want you to get in the habit of posting pictures. And while I'm saying it, Ziba, are you comfortable posting a picture? If not, I'll cover it. Guys, I have a copy of this checklist on my desk every time I take a trade. If it fits the rules, I don't worry about the outcome because I know that I have a statistical advantage. You don't have your account yet? You should have a capture account when they loaded your software. Do you have your software yet? There's that high probability trend trade. Not yet? Okay, no worries. Well, welcome to the room. It's great to have you. Whoever you're working with, Ziva, let's get that software on your computer. Because the sooner you're looking at everything, the easier it becomes. So guys, here we go again. Small's above the large are wide. They're angled in the direction of the trend. We haven't reached the key area yet. Can I activate a limit order at an area at large triggers without a termination condition? Is it doable, guys? Is it a rules-based? And I do not call trades. All I talk about is when the rules are met. John, it's you. Your stuff is huge. Goes short, out at termination. Fighting triggers, goes long, doesn't work out. Everything agrees, and I'll be darned. You get an opportunity to take some quick profits. John Novak using chart reading to identify advantages to get in and out of the market assertively. Ed, 50-50 with divergence. Broke your rule, right? Rules met or rules not met? It's all right. Ed, can I tell you that this is some of the best annotation? You identify the result, and then you remind yourself, follow your rules, because Ed, you can read the heck out of some charts. And now we're testing that key area again. And now the small triggers are through. And now the large triggers are strong. Do you see how that works, guys? A little bit of patience. And here we go, watching that fight. Guys, in regards to high probability trend trades, this has not been the most illustrious day, has it? Everybody's waiting for the feds to say what they have to say. Everybody's waiting. And you can see it in the consolidation, guys. If you have time in the afternoon to trade, chances are it's going to be outstanding. But the greatest thing of all is that if you whittle your plan down to two options, either rules met or rules not met, You stay out of this mess. Termination condition to a termination condition to a termination condition. Right back to a termination condition and down to a termination condition. Straight to a termination to a termination to a termination. Guys, there's people out there blowing out accounts today trying to pick the direction. There's people out there getting in and out of trades. The money they're spending on commissions, they could buy a new boat, go sit on it, and save themselves some headaches. Your rules have to provide a statistical advantage. And if you do not have the advantage of a clear path, you go from being a trader to a gambler, right? If you do not have the advantage of momentum, if you willfully forfeit that advantage, you're creating challenges for yourself, guys. And you're gonna get bored. You're gonna say to yourself, oh my gosh, I just wanna take a trade. But if your rules aren't met, just what Gary said, it's not your trade. And guys, you're gonna post in this classroom enough that I'm gonna be able to identify what's going on your chart before you ever do it. Let's see if these arrows line up with anything. Look, Ron. Ron says termination condition, odds favorable, clear the problem, get in, get out at trouble. This is a great plan, right? Guys, if you have any doubts about whether or not I pay attention or if I'm just flapping at the gums, my entry was a little low, sorry. But where I called his exit, it was exactly the same, wasn't it? Everything you do, whether you're trading patterns for consistency, if you're trading patterns to give you an advantage, people develop patterns. People trade in patterns. People see things in patterns. And you will develop trading patterns. You'll develop a plan that suits you. You'll do the same thing over and over. Guys, I'm going to identify that pattern in you. I'm going to recognize it. You'll get to a point where I don't even need you to write on your charts. The second I see you post a picture, I pretty much know what you're doing. And if you deviate from your typical plan, then we can have that conversation. So I need to know your plan. Write your rules on your charts every time you take a trade. Write why you got in, why you got out. Let me know what you were feeling. And then I can begin to recognize those patterns in you. It's a very key part of what we're doing. Post in the room. Track it in your spreadsheet, guys. All right. We've reached resistance. Did the S&P break out? Oh my gosh, terminations for the win again, right? Let's keep it on crude oil and see what they do. Remember to look for the advantage of momentum, the advantage of a clear path, and the advantage of absolutely nothing in the way. John just posted a picture. John, instead of the Discord link attachment, because that takes you to the discussion, if you'll post the actual picture, it's easier for people to get a hold of. Otherwise, it begins redirecting all over the place. Guys, I'm going to take just a couple minutes. I'm going to refill my water because I am parched. If your rules are met, take a trade. If your rules aren't met, sit on your hands, take a picture, tell me why they weren't. Last hour is going to belong to you guys. I want to see your questions. What do you want to talk about? Ziba, I know that it's day one. But maybe something hit, maybe something clicked, and you're like, you know what? I wish I knew a little bit more about that. Let me know what it is. We'll talk about it. If you need help with entries, exits, you want to talk about that mechanical management approach, I've got pictures, or we'll just go through the website and take a little tour. Guys, I'll be back in about 5, and we will finish off this day strong. hour, and Ziba, that means you're exactly where you need to be. We all need to study a bit more every day, right? Every day is an opportunity to get a little bit smarter, a little more study. So when you're going through the educational materials, of course, Discord lines it out for you very easy. Oops, absolutely. NG, do you mind reposting it? Or you can give me just a second. I'll go search for it. Either one I'm okay with. Going through the self-training, going through, and then if you have any questions, even before you get your Ninja account, it's okay. Take pictures, post them in class. And the great thing is, Ziba, is while you're waiting for your live account, sign up for a demo. Who are you working with? Who's your salesman? Can I ask? I love this platform where I don't have to type and you do. It's so easy for me. You signed up for demo? Okay. Let's get you up and running on indicators today. Jim Forbes will get you taken care of. No worries. Tech can help as well. But let's get you looking at those indicators. You don't need an educator account for it. Perfect. Just want to make sure. He's amazing, and he'll get you right where you need to be. But the sooner you get software, the easier everything starts to come together, I think. So just want to put it out there, though. If you have questions from any of the materials that you're reading, and this goes for anybody, of course, it's okay to post them in the room. In the meantime, if you want, so that you can take pictures, here is a link to the free download for TechSmith Capture. If you're going to do this for the rest of your life, like hopefully everybody in here is, you can use Snagit. It's got a couple extra bells and whistles, but that free TechSmith will allow you to take a picture, will allow you to post it in the room, will allow you to annotate it and ask questions. So if you're going through, if you want to go ahead and download that today, or Jim can help you, it's kind of cool. You can go through the materials. And guys, I always invite everybody to do this. Let me figure out where my TechSmith capture is. Usually it comes up for me. If I'm going through the rules, maybe I'm looking through the study guide and I'm curious. I'm like, okay, this says when the trade rules are true, and I'm not sure what mark means or signals defined. I can take a picture of a part of a picture that you're studying. I can take a picture of maybe something from a video, and I can just use arrows. I should be able to use arrows. There it is. My computer lagged a little bit. Oh no, it's just a big... I can use arrows and I can use shapes and I can ask questions. And it's really pretty cool because you don't have to take a trade to get more information. You don't have to take a trade. You could literally be looking at entries and just take a picture and post it in the room. So that's for everybody. If you ever need help taking a picture, guys, if you get to the point where you're like, I really want to ask a question, I really want to share, but I'm not sure how, let me know. I'll go through a full tutorial in class. You can also go to the software user guide. And the second section on there is the how to take a picture, how to annotate charts, how to share in class. But I'll cover that every day for the rest of my life to make sure you guys are good at it. All right, NG, I apologize for missing your post. That happens now and then, guys. There's a lot of posts looking through, doing what we do. And if I ever miss your post, do exactly what NG did. Just go, hey, we missed one. Either repost it or I'll go look for it. So let's see what you have. You forgot to delete this entry while listening to me about a chart and you got stopped out. So you were going to take it, divergence printed, and you're like, well, that's not my trade. And then you moved your targets up because you got into more than you would normally. I see short and then out, and then short, and then just really quick, make some quick money, because everything does say down, right? And then profits on the final one. And then because all of the triggers were still down, because all of the momentum was down, I like it. Letting the 8 range, once again, using that 8 range chart just as a confirmation, confirming momentum. And it does overrun the area. Why? Because there was a loss of momentum, right? On a 50-50, loss of momentum. It pushes beyond the area. And it always gets you high tick, doesn't it? Never fails. And then you get a reversal bar on your market flow with everything still saying down. I love your re-entry. A little tight, and then trusting it to get to that next area. NG, I think that you did it well. I think divergence on the first entry lets you know that it had the potential to move up a little further. Sorry, I accidentally closed your chart. Divergence on the entry lets me know that I either need to increase my stop or I need to wait for some sort of confirmation. And then you got that confirmation and just re-entered on the correct side of the small triggers with everything still down. I think it's a great heads up re-entry. I think that the divergence on the push-up might have kept you out of that first one. And then waiting for that 8 range confirmation a little bit. Nice trade. What time is it? It's 11:10 a.m., guys. We're still about an hour and a half out. I have smalls inside of the large, right? This market's just grinding up. Loss of momentum, no areas inside of favorable large triggers. I don't have any high probability trend trade rules met, but do you guys see how with the losses of momentum, it pushes, doesn't it? Why do we typically get in at the top of a range? Because we have odds favorable momentum. Did that one make it back? Did anyone get an entry there? Ah, just above it. So close. Has the S&P broken out of a range? Oh my goodness. Look at that, guys. Three divergence in the same general location. Could be a trend ender. Strong triggers. Everything says up. I don't have a termination condition. I can create a window of opportunity. That's all I can do, right? All I can do is say, well, my small triggers are outside of the large, although it's not my best look, still have momentum up. I haven't reached 2313 yet. I haven't hit that key Fibonacci area. Have a little bit of a slowdown with divergence on my 5-1, but my small triggers are outside of the large. Everything says up. Let's just see what happens. There's a reversal bar in the direction of the trend. We identified where it's likely to continue. Can we identify where the market is likely to go based on momentum? Can we create profits targets? Can we identify a first trouble spot? Isn't that amazing? All we're doing is creating expectations based on patterns. We're creating entries based on rules, identifying advantages based on trigger lines and Fibonacci, and then practicing them every day until they become second nature. Anything that wins 70% of the time, guys, it's obligated to lose 30. There's just no mathematical way around it, right? So doesn't it make sense to enter a trade with statistical advantage? Doesn't it make sense to expect to not win every trade? To understand that when you begin to give away advantages, you potentially give away, you change that percentage. That's the S&P. I don't want you guys getting nervous and antsy. Crude oil, loss of momentum, loss of momentum. Price pulls all the way back to support. Guys, does everybody remember the gap theory? What happened to the large triggers? They didn't follow, did they? And I'll be darned, price snaps right back to them. Gary, 7601. Oh, you weren't paying attention. It's an area likely to stop the market based on the 21 as well. I wonder if 8 range gave any indication at support. Guys, that's a market flow signal to initiate a trade when the rules are true, if you have rules for it. Rob, I don't have one. But congratulations, Rob. Go back and take 100 pictures. Take 100 pictures when this condition is true and see how many times it snaps back to it and see what your entry looks like. This is how plans come together. It really is. I do all the work for you initially. I give you a high probability trend trade. I give you a very conservative management plan. And what happens is you really begin to put it all together for yourself. John says trend trade long on the S&P. John, seriously, no more steroids in the old computer monitor. It's everything that we just talked about, isn't it? In at 1850, looking to get to the key Fibonacci area. And you know what, Rob, I agree. You're going to begin to recognize patterns without realizing that you're recognizing patterns. John also says that with losses of momentum, if he gets a second loss of momentum, he's not willing to lose on this trade, especially in a market that's been range-bound forever. And absolutely, Gary, when that 21.3 leads the way on that edge trade, it works out, and there it goes. Remember? When that pivot comes from space, not from an area, and it pulls all the way back, you can create expectations, and we'll see if they get it up to 76.55. And a little bit of dancing happened on the ES right now, isn't it? If you got 1950 on your entry, if you entered at the 1-to-1s, guys, and you were taking that conservative plan, you've already put $100 in the bank, and you're already break even on a trade that can't lose. And one of two things are going to happen. It's either going to stop you out, or it's going to go to the fib, right? If you were super conservative, you're probably already out of this trade. If you're experienced reading charts, there it is, Gary. 21.3 says up, pivot from nowhere, support's likely to hold, triggers don't follow, market flow signal from an area of support that lines up on every chart. It's a little advanced, but Rob A., the chart read is the same, right? And I think that this is the point, and this is why we keep it simple initially. With every trigger above support, support's likely to stop the market, right? Every trigger above support, support's likely to stop the market. You could even say it on the 5-1. Every trigger line above support, support's likely to stop the market. And just to keep it going, same thing on your 8 range. So if every chart agrees, and you get a signal, are you willing to risk $120 for the potential to make 500? That's a question that only you can answer. But you start thinking, you start thinking in terms of advantages, guys. You start thinking in terms of advantages and disadvantages. You start thinking in terms of my rules are met because I have momentum. My rules are met because I have a clear path. My rules are met. And you stop thinking in terms of, I hope this happens. I want this to happen. Wouldn't it be great if this happened? It becomes a matter of indicators say. Two divergences say, indicators say, I may push below 41.18. I may take out that previous pivot. And when I exceed that previous pivot, I'm going to reevaluate at 41.17 because I still have all of my triggers above. Does that make sense? Pretty cool, right? I'm not saying, man, I hope I get long. I say, well, what are my advantages? My advantages are everything's above an area. What's my disadvantage? I've lost momentum twice. My small triggers aren't wide and separated. And then it comes into patterns. When I start seeing two divergences, a very likely pattern is that price will meet or exceed that previous pivot. And it just did that, didn't it? I'm not saying that there's a trade there, but maybe it keeps me from hoping that it doesn't do it. Maybe it keeps me saying, you know what, I still have everything up. Maybe I'll just keep my stop where the market shouldn't go. I've already taken profits. I'm willing to risk it. Let's see what happens because my small triggers are still outside of my large triggers. And you'll get to a point where you will very logically and pragmatically simply decide either my rules are met, my advantages are there. Whoops, what did I just do? Or they're not. Some people create a plan that says if the small triggers are still outside of the large, even with divergence, that's a scenario to hold for the next area. But better entries make it easier to manage a trade. When you're in an area, when you wait for the retracement, it's going to make it easier to hold on to that trade. But until you have the wherewithal, until you have that know-how, guys, do you remember the very mechanical approach that we talked about? Let me show it to you one more time. Whoops. Sometimes on 3 monitors I go a little sideways. Here we go. Keeping it mechanical and without opinion. While we wait for the market to do what the market does, let's put this one in there and let's talk about it. And this is on that example plan. And then once again, I'm going to give you that example plan. I want you to embrace this thing. Expectations met, right? Second divergence, we exceeded the previous pivot. We'll see what happens. But clearly defining your management plan. Step 1, trade 2 contracts, and my initial stop will be 12 ticks adjusted below or above the window of opportunity. So here is my entry at a mid-band inside of favorable large triggers. My initial stop goes up here where the market shouldn't go. Because this is the first step. And I'm going to give you these in the room. Steal them and put them in your spreadsheet, just like I put them in mine. You're in the market. My stop will be moved 2 ticks above or below the reversal bar in the direction of my trade. I've entered the market. I've got a reversal bar, and my new stop is 2 ticks above it. Guys, this is mechanical and methodical, and there's zero room for opinion all you're doing is exactly what your plan says, and it's reducing the fear and the anxiety and the nervousness. There's nothing to do now. I'm either going to get stopped out of this trade or my first target gets hit. And where's my first target? My first target, per my plan, is $100. And if the first target is hit, my stop is moved to break even without anxiety, without fear. Whoops, let me get that. I forgot to put this one in the room for you so that you can build your management plan pictures. $100 in the bank, right? Feels good, dopamine kick. I just had a winner with the advantage of momentum, with the advantage of nothing in the way, with the advantage of entering the market where it's likely to continue. Pretty awesome. And now absolutely nothing bad can happen to me, and I won't move my stop again until either my second target is hit or I'm stopped out break even. So I've got 100 in the bank, and I'm either going, I keep forgetting to give it to you. I'm either going to get stopped out and the end of the trade is going to be $100 and break even, probably net $95 after commissions. Not bad. Do it 10 times a day. That's a great day. Or my second target's going to be hit and I'm out of the trade with $300. Guys, this is the most mechanical approach to management that you can come up with. This is the most mechanical approach. So in your spreadsheet, each and every time you take a high probability trend trade, remember that your plan identified entries. Every time you take a high probability trend trade, it creates an opportunity for management. Annotate your charts for management while you're focusing on entries. And what's going to happen is ultimately you're going to recognize advantages after a mechanical entry where you can say, wow, with this much momentum, I can hold to that next area. So you'll start to create a management plan based off of the mechanical, using your chart reading that indicators momentum and clear paths all the way down. So Ziba, this one, and again, when you load your software, everything's going to come through, but we don't have to wait for that because you're in my class and I got you. So I'm going to go to, that's the wrong one. Here we go. I'm going to go to the study trade tracking sheet, and I'm going to give you the link to it. Do you use Microsoft Excel, Ziva? Perfect. So watch this. You're going to go File, Download, and you're going to download it as Microsoft Excel. Once you do that, it's typically, if you're running Windows 10 or 11, it's going to show up in a download bar down here. I'm going to click on that download, and it's going to give me an Excel version of that Google document that we just had to download. All I have to do is enable editing, and this is going to free it up for me to save it. And then File, Save As, and I'll pick a spot. I'll put it, I don't know. I'll go to my desktop, I'll go to my classroom, and I'll call it Ziba Sheet, and I'm just going to save it. And now it belongs to me. Now I have this. I can do whatever I want. I can type on it. I can vandalize it. I can fill this thing up. And I can start that process of creating repetition. Absolutely. And start that process of building a management plan. And start that process. Look at this. Under chart reading things, I've got gap theory. There's that old picture again, coming back to the large triggers, right? On my spreadsheet, I've covered perfect 50-50 entries. NG was nice enough to post this one in the room. It was such a great entry on a 50-50 trade that I stole it for my spreadsheet. Another one with the gap theory. Once again, being able to identify these patterns is going to help make me successful. Here's one about two divergences and a lower push. We just talked about this in the ES, right? Two divergences may create a lower push. What happened in the S&P? Two divergences created a lower push. Guys, patterns. And where did it push to? Right beyond the pivot, right at a mid-band inside of favorable large triggers and just above support likely to hold. And if you're taking that 300 and you get in at 18, guys, you're already out of the market with 300 in the bank. It's nice when the market gives us live examples of what we can expect based on what we see. Second divergence gives the lower push. Chart reading says this move is more than likely not over because of the advantages present. A willingness to re-enter because the advantages are there. Right at a mid-band that lines up with the pivot stop out because of the second divergence above support that's likely hold. You guys remember that old song, She Swallowed the Spider to Catch the Fly, and you keep going through that pattern? That's all day trading is. Because of the momentum, I looked for a clear path. Because of the clear path, I looked for an entry. Because of the entry, I took the trade. And now I just have to learn to manage it. John, your rules say that a second divergence with the small triggers outside, you used to hold those. I recognize patterns in everybody. Now we're back at that trouble spot, right? 41.22. What a great place to take a portion of your profits if you're long. Get to break even. No reason to give any money back this close to a termination condition. But doesn't everything say up? Smalls above the large, larger wide. Smalls are up, synthetics are up, large are up. Is there anything on anybody's charts that suggests this market will go any direction but up? Pretty cool, right? Hey Ziba, I'm gonna give you a pop quiz because I feel like we're doing all right here. Rob A, have a good one. Are you ready? 2 triggers only. Ziba, do you like that trigger? Look for long trades. Smalls above the larger wide, they're angled in the direction of the trend. See how that momentum is creating and starting to move? Isn't that amazing? And then we could identify right here at 41.23. Let me put those indicators back on. With that momentum, with that look, Ziba, you're going to be able to open up your charts and say, you know what? Everything says up. I've got great momentum. I love the way this feels. There's nothing in my way. And that market's likely to make it to 41.23. What a great place to put in a profit target. And then when you have those, you're just going to say, I'd be crazy not to take this trade. And it comes through repetition and it comes through practice. But there's no reason to hope. Well, it hit resistance. This is a great profit target, isn't it? And if you got in at 18.50 and out at 23, that's 4.5 points. So now we reach resistance. And those small triggers, both of them, have got to break through this area in order for us to have a clear path once again. So the process starts over. If the small triggers break, if we have odds favorable momentum, and if the conditions are met for an entry on the 5-1 that works on a 50-50 trade, then we'll look for longs. And it just went right to that second area. So I'm in a holding pattern because of termination conditions, because I'm not willing to forfeit the advantage of a clear path. And it becomes easier and easier to remain patient if you just put $700 in the bank, right? You're like, well, shoot, I've got all this money in the bank. I'm going to sit on my hands and wait for these advantages. And that's all that we do day in and day out. Gary, same picture. I think you posted this one before of that little edge trade. Now we're just waiting for advantages once again. And here we go. There's that edge trade, right? Support likely to hold. Now there's odds favorable momentum. And remember, we talked about creating expectations based on patterns. Everything that we do is based on patterns. It is 11:34 right now. At 11:16, I drew a circle on resistance. And I said that when a pivot is coming from the middle of nowhere, when that area is not reached, those buyers sure do like to get that next area. No real opportunities through here, right? Pivot stop out, pushes back to support, caught between termination conditions. We begin to create expectations based on patterns. Guys, patterns take a while to begin to become second nature. The easiest way to allow it to happen is to take a lot of pictures. Guys, this is from this year, maybe November, December. I've got about 3,000 pictures that I've taken. If you go to my screencast account, I was up to about 6,500 before I had to start over. I'm at about 10,000 pictures in 2 years. I take a lot of them in this class. I take a lot of them when I trade. I can tell you John Novak takes 30 to 40 pictures a day of trades that he takes, pre-trades, post-trades, management things. The cool thing is he'll post his pictures in here and let you know exactly what he sees when he sees it. It's pretty cool. So get in the habit now of taking a lot of pictures. Get in the habit now of recognizing advantages. Terrence, let's see what you're doing here. Terrence says 3 divergences. Everything says up. Rockstar entry, just a little bit above support, right? So Terrence, now you have the knowledge based on conversations, based on patterns, that these 2 divergences just above you with everything still strong up may take out that previous pivot. It makes that mid-band a little more enticing, but knowing that, you keep your stop in the right spot and you take profits right where the market should go. Terrence, beautiful execution. Guys, if you're not doing this yet, you will be. You will be. So now we have a 50-50, right? Small's above the large are wide, they're angled in the direction of the trend. Guys, there's that circle from 11:16. They made it, and they made it with odds favorable momentum. Isn't that pretty cool? I used to think John Novak could tell the future when he would do stuff like that. I'd say something silly like, man, I'm going short. Look at that. And he goes, no, they're probably going to finish up to 76.55 before they allow it to push down. And now we have odds favorable momentum. We have an area with the potential to break that hasn't yet broken. And there's a divergence, a loss of momentum on the 5-1 as it pulls back to areas of support inside of favorable large triggers. Have you created a plan that gets you into this trade or that keeps you out of this trade? Are you waiting for a market flow signal at the area? Are you checking in with a 21-3 chart to see if it's reached its key areas yet? And there's that key area on the 21-3. And it lines up with the key area, 76.75. Lines up with the key area. Pretty cool. This is all we do, guys, every day. Open charts, read our indicators, wait for advantages. When the advantages are present, have a plan in place to take advantage. Ziba, that's all I need you to know in the beginning. Because the patterns are the same. And let me show you what I mean. So if we talk about a 13-2 and a 5-1, In Ziba, there's a two-part process for recognizing an area that may stop the market. The first part is price retraces to the area, price reaches an area, right? So when price pulls back to this support, every trigger is up. Every trigger is above it. So based on termination conditions, this is an area, and I use the word likely to stop the market when it retraces back to it. Pardon my spelling. Does that make sense? Price comes down, reaches an area with every trigger line above. This is an area likely to stop the market. So this is it on a 13.2. We take these advantages and look for an entry. But let's look at it on a higher time frame, not because you need a higher time frame, but because, oops, I don't have a higher time frame. I'll build one. But let's look at it on an 8-range chart. Isn't it the same concept? An area of support with every trigger above, the area is likely to hold. And then I'm going to build a 21 chart real quick, and let's just see if it had the exact same look. This is the S&P, 21, 3, 10. Guys, it'll take it just a second for those calculations to happen. And this is why I encourage people, don't rush. Don't put the pressure on yourself to have to know everything today, because everything that we do is just chart reading, and it's just that chart reading that identifies advantages, and the chart reading is the same on every market. The chart reading is the same on every time frame. The chart reading is the same on futures, on stocks. We have people that use it for options, people that hedge, people that raise cattle, that harvest soybeans. They do it as well. So at that 17 area, I didn't have an area on my 21.3, but what did I have? I had odds favorable momentum, didn't I? Coming right from a termination condition. So if I were just going up a level, this odds favorable momentum, and you recognize it on any chart, supports this support holding, which supports this area for entry being a good option to get me up to the next level. You don't need it for a high probability trend trade. But nobody in this room, well, I won't say nobody, but it's rare that people stop at the basics. There's rare that people say, hey, you know what? The checklist is amazing. I'm going to stick with this checklist for the rest of my life. There's people that do it, and they do very well. But the average human needs movement, needs excitement. The average human wants to do more, and your chart reading will take you to more. 2 divergences. You want to see if that pattern's true again? Is the market going to push down here to the previous pivot? I don't know if it is. But because of the pattern, I can at least have an educated decision about what I want to do as a trader if this pattern presents itself. Maybe it's stop placement. Maybe it's exit and re-entry. You guys remember, there's some pretty big news going on in the S&P in about an hour. And there goes crude oil. They're all pushing it up as well. I'm in a holding pattern on both charts, both markets. It looks like the S&P wants to fulfill expectations again. But until it does, it's just potential, right? It has the potential to take out that previous pivot based on patterns, but until it actually happens, it's not a thing. I don't try to predict the future. All I try to do is wait for advantages, go through my chart reading, and give myself the clearest shot at success. What do you guys want to talk about? We've got about 15 minutes. Ziba, day 1, is it a little easier towards the end of the day, I hope? Guys, if you're brand good, and it gets easier every day, I promise. If you promise to keep posting in this room, asking questions, being a part of the conversation, you'll get exactly where you want to be. I don't have any doubts about that. And for those of you that are sitting on the sidelines, wishing you'd get more answers, wishing for clarity, I want you to follow along on that lead. No worries. So let's do this. Can I give you a tour? Let me give you a cheat sheet. This is just a 13.2, but it doesn't matter. The indicators are the indicators. Or you know what? Let me cancel out of this one, and let's find one that gives us divergences as well. Perfect. This is going to be the perfect picture. This is just a big S&P chart. So the indicators that we're looking at. This red line, you're going to hear it called a fib, Fibonacci resistance. Not read, red. All right. Down here, this is a fib. Support will be blue. Okay. So Fibonacci resistance, Fibonacci support. Yellow dots are what we call one-to-ones. And depending on the direction of the market, they can act as resistance, or if the market's trading down to it, they can act as support. Just like fibs. So we have Fibonacci resistance, Fibonacci support, one-to-ones. And then I'm going to cover a little stuff here. This is your midband. Oops, I put an arrow on my call out. This is your midband. It's a moving average, which you don't need to know, but some people like to. If price is above, it's green and acts as support. If price is below, it is magenta and acts as resistance. So here we have magenta acting as resistance. Green over here, price is above, it's going to act as support. And then this is a divergence high. There's a negative number. Where's my number sign? And magenta line. Means loss of momentum at the pivot. All right? That's the magenta. And then down here, let's see where I can put this one in. Here we go. Cool. So we'll cover a pivot as well. This is a divergence low. Cyan line, negative number, means loss of momentum at a pivot. And we'll define pivot in just 1 second. And then your momentum indicators. Small triggers are fast momentum. Large triggers dashed, slower. And these work together to establish the overall momentum, right? So when I say a loss of momentum, so Zeba, if you're driving 100 miles an hour down the highway and you hit the brakes, you're losing momentum. On that same token, let's go back to, I'm going to go to termination conditions real quick. And I'm going to show you a picture. So when we talk about pivots and momentum, first of all, a pivot just means that the market went down and then back up, or it went up and then back down. Pivots happen all day long in the market because it's fear and greed. It goes up and down. With me on that? When this negative number prints, when this cyan divergence line prints to the right, or it prints from a high and that magenta goes, I'm going to use a little colorful explanation. Oh, I love this. So if this is price, and it creates that pivot, it goes down and up. There's our pivot. I'm going to let this orange arrow represent the momentum in the market. So while price goes all the way down, that's the wrong color, isn't it? That's hard to see. While price goes all the way down and forms this pivot, Zeba, the momentum doesn't follow. The momentum doesn't follow to where price goes. The momentum doesn't follow to where price goes. So what this is telling me, and this is written in the background on indicators, what this is telling me is the market came down, created a pivot, but the momentum isn't following. The market creates a second pivot, and the momentum still refuses to follow. And then on this third pivot, once again, momentum isn't following. Do you remember our trigger line lesson? Smalls outside of the large mean odds favorable momentum. It means a strong move. Notice how when we begin to lose momentum, when we begin to see these divergence lows, look how they work their way right back inside of the large triggers. All we're doing is we're identifying a potential slowdown in the market. This one right here, Safia? Absolutely. So we're identifying loss of momentum. Our trigger lines are identifying a loss of momentum. And you'll be able to use this because 3 divergences, 3 losses of momentum in the same area, let me know that a trend might end. So you'll be able to, through chart reading, begin to recognize these losses of momentum. And if we go back to the chart we were doing, you'll see them on a higher time frame as well as lower time frames. And I think that this is a pretty good key. Safia, was this the picture you were asking about? Awesome. So guys, this is all in the videos. There we go. I just did, Sam, right above you. Can you grab it? Would it be easier for you guys if I made a link to it? And Sam, welcome to the classroom. It's great to have you here. Do me a favor. Get in the habit of posting. Oh, Z, I'm here for you guys. I absolutely love teaching this class. You guys make my class more interesting. You guys make my class more exciting. The more questions you ask, guys. I hope you guys have lots of questions. I hope you don't understand everything on day one. Because if you did, I wouldn't have any job security. So thank you for that. Let's get to Paul's picture real quick. Paul, how was the snow, man? Was it? Nice. Thinking about you this weekend. Not in a weird way. So Paul, strong triggers, no termination conditions. You know this rule. You know this look, Paul. 2 divergences, Typically takes out the previous pivot. You're in a little high, but your stop is solid. Your targets were amazing. Nice job. But now we're losing momentum. Now we've got two divergences. Now you're using that previous pivot idea. You forgot it for a second, and then you remembered it. I like it. Nice job, Paul. Way to jump in, make some money. And guys, remember that everybody is at a different spot. Everybody sees things differently. Elvis, working that termination condition plan, right? Letting things roll a little bit. Taking the money right at the trouble spot. Elvis, beautiful entry. What an exit. Letting it sort itself out. Everything agrees. And then taking it. Nice trade, Elvis. Way to use chart reading. And then there's that one. John looking for that second entry as well. Ron, have a great afternoon. Gary's absolutely right. Don't limit your picture posting to the trades you take. Let your pictures be of everything that you see. And then, Paul, that one didn't quite get you, did it? Two divergences, didn't quite take out that previous pivot. Gary, it just may not be your rules, right? Remember that, guys. Everybody's plans are different. Everybody's plans are different. One of the things you'll hear John say a lot, he goes, man, I'm okay with an extra 3 or 4 ticks. I'd rather catch the move at support inside of favorable large triggers than miss it altogether over 2 ticks. I hear that a lot. Gary, this is nothing, just nothing beyond areas breaking, anticipating more up, and if I had to guess, that 21 chart supports it very much as well. Smalls outside. And then Siva, do you see it? 1 loss of momentum, 2 losses of momentum, 3 losses of momentum, and those triggers returning, and it pushes it all the way back to support with every trigger up. It's just chart reading over and over and over until it becomes so comfortable that you just don't miss it. No, I don't trade on anticipation either, Gary. 2 options, right? 2 options. Rules met. Rules not met. And guys, whose rules are you trading? Are you trading Elvis's rules? Are you trading John Novak's rules? Are you trading Paul's rules? You should be trading your plan, guys. I've tried to trade other people's rules and it costs me money. Because some people have 20 years of experience and their rules are different based on their ability to read charts. Some people have bank accounts so much larger in mind that they're willing to risk more. Everybody's got a different scenario and nobody's wrong. It's just a matter of what your rules are. And until you define them clearly, you're going to chase. So define them as quickly as you can. Guys, that's it for me today. I felt like that was a pretty good class. One more question, guys. Based on termination condition rules, price pulls back to support and every trigger line is above it. Is this an area likely to stop the market to the downside? Anybody? And if it is an area likely to stop the market to the downside, so Sam, you and I are going to talk about termination conditions tomorrow. And trigger line location. And for Sam and Zeba, for my new users, I'm going to give you a link real quick because termination conditions are a big part of what we do. This is a 5-minute video. And all it does is talk about the relationship of trigger lines and the areas they reach. take a look. This has helped a lot of people. Watch this one this evening. If you have questions about it tomorrow, let me know. But we'll go through each and every rule again tomorrow. We'll go through each pattern, each setup. We'll do bar by bars. And we're going to repeat this process every day until you guys get exactly where you want to be. But that is it for me today. Do not forget, if you're trading this afternoon, at 12:40 p.m., Fed Chair Powell speaks. You're 40 minutes out. You can do whatever you want. I don't tell people what to do with their trading, but that's a rough time to be in the market. Just throwing that out there. And Gary, that's some slow stuff. But Ziba and Sam, welcome to the class. Thank you for being here. Gary, 3 divergences, not taking the trade. Oh, Ziba, I'll tell you what, do your study. That is all the thanks I need. Do me a favor, start showing me all your successes and show me your challenges, and that's all I need from you. Thank you very much. I appreciate that. Sam, and you will too. And remember, if you get overwhelmed, if you feel like you're stuck, use your voice, guys. I tend to be a very warm, fuzzy person, and I really do. I will celebrate victories as much as we look at the challenges. So don't be afraid to post in this room. And then again, of course, everybody has a salesman. Everybody has a Nexgen contact. And from the contact page, if you have educational questions, please feel free to email me. I prefer that you post in class, but maybe it's 2 o'clock in the morning and you're looking at charts and you're like, oh, I just have to get this one to them. Feel free to send it to me. Feel free to request me on Skype. On Skype, I won't give you trading advice. I won't do it in the classroom, but we'll talk about your rules. So don't be shy if you need something, guys. I will see you tomorrow morning at 9 a.m. I appreciate each and every one of you. Remember, big news in 39 minutes. See you in the morning.